Good morning, everyone, and good afternoon, and a warm welcome to our guests joining from Europe, Singapore, Thailand, and beyond. My name is Sang Chung. I am the Chief Marketing Officer of KIMVN here in Ho Chi Minh City, and I'd like to welcome everyone to our web seminar titled Beyond the Headlines, a deep dive into Vietnam market in 2025. This year, the global markets are operating in a complex and uncertain times. Shifting trade dynamics with the return of President Trump, evolving US policies, as well as Vietnam's bold government reforms. We believe these situations brings many challenges to the Vietnamese market, but also offers a very unique opportunity. Okay, so for a quick look at our agenda for today's web seminar, we will start off with our Deputy Head of Research talking about the Vietnam macroeconomy, and specifically, what's very topical today is Trump's effect on Vietnam specifically. Second, we will have a stock market overview by our Deputy CIO and some of our investment themes for 2025. Third, a very quick overview of our Vietnam Growth Fund, the SICAV fund, and its performance of 2024. And lastly, we have a very special guest speaker, Mr. Hai-Young Lee from the International Finance Corporation, IFC, and he will discuss his current activities in Vietnam and share his views about investing in this very exciting market in 2025.
Hello everyone, my name is Khoa with KIMVN and thank you for joining us today. For this year, 2025, I would say is a very interesting year. The country is like an engine that's getting more power. We highly appreciate the government effort on boosting the economic growth to escape the middle income trap. However, most of investors are now concerned about the impact of President Trump on Vietnam. Therefore, this is the topic to discuss before jumping into the economic outlook. From our observation, Vietnam is not the key target of President Trump. Firstly, Vietnam focuses on assembly work like electronics and low-cost manufacturing like apparel or footwear. These activities complement rather than compete with U.S. strategic industry such as high technology and semiconductor. The trade data between two countries can illustrate this complementarity. While the top 70% of U.S. global export somewhat represent the strength of the U.S. Manufacturing, these categories account for only 40% of Vietnam export to the U.S. The remaining of 60% of Vietnam export to America fall outside their primary export focus. Secondly, Vietnam has strengthened its tie with the U.S., signing a comprehensive strategic partnership in 2023. Since then, the country also attracts significant U.S. investment, including $250 million USD NVIDIA AI Research Center, $1.6 billion USD Amkor OS80 semiconductor plant, and other high-profile projects like with Marvell. The most important thing, Vietnam has shown a willingness to address trade imbalances between by increasing imports of U.S. goods like chips, military transport and civil plants, and even LNG in upcoming time. Last week, a delegation from Vietnam led by the Industry and Trade Minister has come to the U.S. to discuss about trade agreements, tariffs, market access, and energy cooperation. Additionally, authorities have tightened transshipment regulation to prevent Chinese goods from being mislabeled as made in Vietnam to avoid cases like solar panel export from Vietnam by Chinese company despite little manufacturing taking place in Vietnam. You have never seen any countries in the warning list of the White House that is trying to cool down the situation before officially get attacked by tariff like Vietnam. We are positive on the country's situation on tariff issue. We don't want the worst thing will happen. However, we have thought about the downside scenario with more escalate between the US and trade partners. It obviously impacts to Vietnam on the trade. Maybe Vietnam may export less to the US and have to compete with other countries that seek new markets out of the US after the tariff. Number two, inflation. Tariff also lift price of everything up and then affect to Vietnam CPI. In the severe case, FX outflow can be foreseeable. Accordingly, the GDP growth for 2025 is expected to lower by 1 or 1.5% from our base case projection of 7%. Interest rate can go up and VND can be devalued more. It is quite challenging, but the overall macro picture after the President Trump tariff headwinds are still manageable. Coming back the economic outlook in 2025, we anticipate a transition from export-driven growth to domestic-led expansion, given consumption and especially public investment. Like mentioned earlier, we appreciate the effort of the government with a very impressive target. However, we are skeptical about the GDP prediction given the uncertainty outside the country. We forecast GDP growth of 7% this year and 7.5% next year, but open the ability to revision of the indicator after Q1 or Q2. Inflation is not a major issue. The government set and accept a higher CPI target of 4.5 to 5% this year, preparing for possible global supply shocks and credit expansion to support the growth. We think 4.5% inflation remains comfortable compared to the past decade. In terms of interest rate, the government continues to deliver a message of affordable interest rate environment to support the economy. The banking system has taken action on that by reducing interest rates in some terms to their client in recent weeks. The last factor, the strength of the dollar is being challenged by trade and tariff tensions. However, good thing is we are seeing the dollar weaken after the reciprocal tariff between the US, Mexico, and Canada. Of course, everything may not be rosy as expected. We keep monitoring global development and adjust our expectation accordingly. With that, let me pass it over to my colleagues for next part of our webinar. Thank you.
Okay, in this part, we're going to look at the outlook of the market in 2025 and also some of the interactive investment theme for this year and beyond. In general, we are largely bullish on the outlook of the market this year, and some of the key drivers are, the first thing is government reforms. If there is a single factor that is creating dramatic changes in the business landscape of Vietnam, I think that is the reform process the government is carrying out. We'll talk more about this later on. The second thing is, the valuation is really cheap right now on a historical basis. Thirdly, the earning picture is quite solid. Among our coverage universe, corporate earnings grew 19% in 2024 and expected to increase 18% in this year and 20% in next year. And finally, the market upgrade into FTSE emerging market may happen late this year or early next year. In this slide, we'll discuss the road that Vietnam is working to become emerging market. A lot of investors have been asking us about the EM status of Vietnam, like what's happening, what is the obstacle, and when Vietnam can become EM qualified. Well, I can say that for FTSE EM status, the pre-funding is probably the only obstacle left for us. But in November 2024, the government came up with regulation to remove the pre-funding requirement. I think FTSE will need some more time to evaluate these procedures and the fair trade handling and statistics. We met with the FTSE delegation a couple of weeks ago, and I think the turn they have is quite positive. So we can expect the timeline in Q3 this year or early 2026 is feasible. For MSCI emerging market status, I think it will need more time, maybe in 2027 and 28. If you look at the chart below, it's quite interesting. It shows that investors do not have to wait until the official inclusion of the market to ensure the rally. In fact, most markets started to perform well right after the announcement of inclusion, which is around 6 months to 1 year before the official inclusion. Now we'll talk about what the government is doing. When I look into a potential company for due diligence purpose, management quality is one of the most important factors for me. And if you look at Vietnam right now as a big corporate, the government is really working hard to create positive changes. In 2024, they solved a series of bottlenecks in the real estate projects. They also established Vietnam Investment Support Fund to mitigate the global minimum tax agreement impact. In 2025, a large scale of cost-cutting project is being carried out, streamline the political system and significantly reduce the number of government staff across the country. The government payroll accounts for around 8% GDP, and the government are target to cut 10 to 20% of the payroll. Then it would add to around 0.8 to 1.6% of GDP growth. At the same time, they target to lower the current expenditure by 20%. It would add around 40% to public spending. So in short, the government are cutting the red tape, reduce bureaucracy, and improve the productivity of both public and private sectors. Now in this slide, I want to highlight that the valuation of the VN index is now quite cheap in terms of both PE and PB. The left chart shows that the PE is trading in the low range of the VN index in the last 10 years. As you can see, we're now trading at just more than 10 times 2025 PE, or around 1.5 standard deviation below mean. So if we expect the market can re-rate based on positive reforms and earning growth, then PE can revert to 13 to 14 in the coming years, which imply more than 30% upside from now. In terms of PB, again, the valuation is also undemanding at around 1.6 times or one standard deviation below mean. We know that valuation goes up and down over time, but if investors are looking to buy now, I think it's a great timing because the odds of re-rating are quite high. Now let's touch a bit on earnings. If you look at the right chart here, earnings contracted in 2023, but they quickly come back to the growth territory in 2024. And we forecast that earnings will continue to grow 18 to 20% this year and next year. These are the 4 big themes that we think are attractive in 2025 and beyond. So the first thing is AI and data center. The AI trend is changing the world and is creating tremendous growth opportunities for countries and for companies that can leverage this trend. The second theme is we like consumer and retail companies because they can achieve superior growth by consolidating the market. In fact, the modern trade market share in Vietnam is only 12% compared to around 30% in other Southeast Asia countries. So if a company can leverage this trend, they can become a big company in no time. The third theme is, investment in infrastructure is a big trend. We believe the government still have plenty of room to boost the public investment, not just in 2025, but also in the coming years. And finally, there's going to be a large inflow from both passive and active funds following the market upgrade. We think the amount could be somewhere between 1 to 5 billion US dollar. Okay, next we'll discuss our SICAV fund performance, and that will be presented by Mr. Sang.
Thanks, San, for your insights into the stock market. Next, I would like to give a short introduction of our Vietnam Growth Fund. It's a SICAV fund, and talk about the performance in 2024. And we'll have our portfolio manager, Lei, speak about the fund and its strategy in 2025 and beyond. So our SICAV fund is managed by Mr. Huy Nguyen, as well as Ms. Lei Nguyen. They're not related, if you're wondering. The total AUM of the fund is 41 million US dollars. And often our portfolio managers have discussed that this is actually a competitive advantage. The size of the fund allows the PMs to research and invest in off-the-radar small cap stocks, as well as make investments in off-the-index companies that are outstanding performers for the fund in the past. In 2024, the fund returned 15.3% on US dollar terms, outperforming the FTSE index by almost 24%, as well as the VN index by over 8%. We also have a very strong 3-year and 5-year track record, as you can see. Outperformance of 38% over a 3-year time horizon, and outperformance of a 5-year time period of 120%. I'm very proud of our investment team's track record, and I think it shows you the outstanding performance and returns that the firm has delivered over the mid and long-term time period. Again, just a quick snapshot of our fund versus our peers. Again, on a 5-year basis, our fund has outperformed against our peers. And you don't see this on the chart here, but on a 3-year time period, I believe we're number 2 within our peer group. So again, outstanding performance by our investment team that we're very proud of. On the left side, on sector allocation, I believe this is just a reflection of our team's investment philosophy. We're very much a bottom-up, research-driven house, and we are not really affected by sector allocation or top-down view. And I think this sector allocation strongly indicates that very much we're investing in stocks on a bottom-up basis. On the right side, on the top 10 holdings, I guess some of the names that have really outperformed for the fund, FPT Corp, a construction company called Katekons Construction. So some of the biggest holdings of our fund were also some of the biggest outperformers, which led to our outstanding 15% return in 2024 in US dollar terms. Okay, I think that's a quick snapshot of the fund, as well as a quick review of our performance. And now I'd like to pass the floor to our portfolio manager, Lei, who will discuss about the fund strategy and its outlook for 2025 and beyond.
So before diving into our specific strategy for 2025, I believe it's important to revisit the core investment principles of our SICAV fund and the broader strategy that followed by KIM. So our approach remains consistent over the years. We focus on high-quality companies that benefit from favorable long-term trends and possess distinct competitive advantage. And that is why you will likely to continue to see familiar names in our portfolios in 2025, such as APT, Vietcombank CTG, and Mobile World. And if you look at the slide, you will see that these names over the years has been consistently in our portfolios and composed of around 50 to 60% of our portfolio. So by staying focused on these strategies, this should answer 50 to 60% the strategy for 2025. So having that said, we fully recognize that the investment landscape in 2025 will be quite different from 2024. interestingly, we see two diverging trends, one for export and one for domestic, and each require quite different strategy to manage. So let's first touch about the export market. So for exports, much has been said about the unpredictability of President Trump and the uncertainty of the global trade. And at KIMVN, we do have our own research and judgment. And as previously presented, we currently assess that the direct impact of the President Trump into Vietnam is quite minimal and even possibly even slightly positive for Vietnam. However, when it comes down to the investment strategy, we believe that it's crucial that we remain open-minded and adaptable to the shifting trade dynamics. This means that while we do see the potential opportunities amid this global uncertainty, we are not taking too high conviction weight on specific outcome. We do not attempt to predict what President Trump is gonna do, and we do not position ourselves ahead of the market trends. So what we do instead is that for the export-oriented companies, what we're trying to do is that we prepare for multiple scenarios. We analyze our portfolio companies, asking them about the competitive landscapes, and we identify which countries might challenge Vietnam exporters, and we assess whether a specific company can gain market share during this turbulent time. And at the same time, we also remain very mindful of the industry or company that could face direct trade barriers, such as tariffs on a specific product. So that is for export. So going back to domestic, I think it will tell a very different story. While the export market is a shared concern for all economies, Vietnam stands out as a very bright spot for long-term growth. Over the past few years in Vietnam, Vietnam has consistently ranked among the top performing economies in terms of GDP growth. But I think what happened in the next few years will even be much more compelling, as the government vision is so ambitious for the next decades. The Vietnam leadership has set a very clear goal, is that we will escape the middle income trap by 2045, that is 20 years ahead, and they are calling the next 10 years to be the new era for economic transformation. And we at KIMVN, we are very excited that we will be investing during this very pivotal time. And so going to 2025, 2025 marks the first step of this very long-term strategy, and we are seeing unprecedented level of commitment for growth from our government. For the first time ever, the government adjusted up the GDP target to 8%, and to support this ambition, the policymakers are also giving out greater flexibility in terms of managing inflation, FX, and they are also more flexible for the state deficit, and they use that to support the infrastructure spending. Luckily, the state deficit of Vietnam is relatively low compared to the region, so we do think that Vietnam is in a good position to apply a very strong expansionary fiscal policy, as well as a very loosening monetary policy. Yes, so to wrap it up, we see that for domestic company, the trend is quite long term, and we are holding a quite high conviction for our domestic company. Of course, economic cycle take time to unfold, and in this early cycle of the growth, we try to shift our focus into a few sectors and companies that can benefit in the early cycle of the economic growth, such as materials, construction, and construction material. So bringing it all together, our approach for this year remains consistent with our core investment principles, is that we try to focus on the high quality company that we have been with over the years. At the same time, we being flexible and adaptable to the changing environment. And we see 2025 to be a very unique year with a lot of opportunities and challenges. But with this strategy, we believe that we will be successfully to navigate this year. Thank you.
Okay, our next, we have a very special guest speaker, Mr. Hai-Anh Lee from IFC, who will share his current views in Vietnam and his current activities. Mr. Lee?
Thank you, Sang, for the introduction. So I'm Hai-Anh Lee. I'm a Principal Investment Officer with IFC, and I'm based in Ho Chi Minh. My role covers the investments in sectors including manufacturing, agribusiness, and services. And I've been here in Ho Chi Minh for now close to 2 years, a little over a year and a half. So nice to meet everyone. Thank you. So I'd like to go over, introduce what IFC has been doing in Vietnam, and we hope there are some common areas of co-investment with the audience here. So IFC, first briefly on IFC. So IFC is a member of the World Bank Group. So you may have heard of the World Bank. So the wider World Bank Group consists of the IBRD and IDA, which is commonly known as the World Bank. And then IFC, we were established about 10 years after the World Bank was established in 1956 to promote private sector investments in developing countries. And then we have another sister arm, MIGA, which is investment political risk insurance arm of the World Bank Group, and provides guarantees and insurance in the developing countries. And then finally, there's ICSID, which is a dispute resolution arm based in Washington, D.C. So the 5 institutions constitute the World Bank Group. So in Vietnam, we have invested over $9 billion since we started in 1994. Vietnam has now become one of the most important countries for us in the East Asia and Pacific region, only after China. So our volume has grown significantly, our number of deals have grown significantly, and we have now worked with more than 130 partners across the country, whether it's agribusiness companies, manufacturing companies, real estate, or many local banks here in Vietnam. So last year we committed $827 million in Vietnam. This year we're committed to do more, and we hope to grow the pipeline even further in the coming years. So our portfolio right now, as of June 24, is we have $2.2 billion of exposure. Around 2/3 of that is in the financial institutions group, which is the team that invests and provides financing to banks and to banks. The division that I look over, the manufacturing, agribusiness, and services, we have around roughly around $500 million exposure, $600 million exposure, and most of it is currently in tourism, real estate, and property. But we are now increasing our exposure in agribusiness and also in manufacturing. And manufacturing specifically, we see a lot of investments from foreign companies, FDIs coming in a lot of interest in Vietnam. So there is a rush, we see a rush from whether it's companies headquartered in the US, Europe, or even China, Korea. There's a wave of companies coming in. So we expect the manufacturing portfolio to increase significantly in the next 1 to 3 years. So we're very optimistic about the growth of the country and also about the growth of the real sector in line with the GDP growth that's expected to grow 7-8% this year. So this is some of the projects that we have financed recently, select projects. VP Bank, on the top left is VP Bank, is a global supply chain finance product that we co-finance with VP Bank for the coffee supply chain. Also, BIMland is a real estate project that we financed about a year and a half ago. This was the first sustainability-linked bond in Vietnam for the real sector. GS25, some of you may be familiar. This is a convenience store, which is a JV between Son Kim and GS25 of Korea. We invested around $20 million of preferred convertible shares. Also, Entobel, this is an interesting one. We invested around $2.5 million with shares with warrants. This is a startup company, but this company does is it grows insects to use that as feed for animals and fish. So very interesting project, very green, which is in line with our focus on climate. So this is a project that we've done on the as an early stage VC type investment. And Guotech, which we did in 2022, we provided $200 million of IFC's own financing and mobilized $500 million of commercial banks. So we provided $700 million to Guotech, which is a supplier to Apple, Samsung, and other large international electronic producers. So like Guotech, we see a lot of interest in the electronics chip making, I would say chip testing and packaging, and also other construction materials in Vietnam. So there's a lot of activity in that regard. So we expect more and more projects to come in that sector. So these are some of the sample projects that we have financed. You may see that Pan Group, we invested $7 million of equity and then $10 million of equity in Pan Farm around 10 years ago. We do private companies, but we also do publicly listed companies. We also do pre-IPO rounds, and we can also invest as an anchor investor before an IPO. So we are quite flexible, and but we want, as a development financial institution, we do have some criteria, especially on some themes such as climate. Projects have to be climate friendly and or have a commitment to reduce GHG emissions down the line after an investment. But otherwise, we're very active in Vietnam, and we hope to see more activity. And with KIM, we hope to broaden the investor base in Vietnam from overseas, and which will fit our role as a catalyst for private sector investment in Vietnam. So thank you very much, and I'll hand it over to Sang before any Q&A.
Thank you, Mr. Lee, and all our speakers for a fantastic session. I'm here back to moderate the Q&A, the last part of our agenda. So let's start with some of the questions that we received throughout the presentation. The first question is from an audience member. Can you share further views of Trump's tariffs on effect for the Vietnamese market? So if I may, maybe I could take this first question. I think Koa mentioned about his views and our research team's views on the effect of Trump's tariffs. But just anecdotally, I think historically we have some data points. We had Trump 1.0, his first presidential term in 2016, where we saw his tariffs on China have a positive effect actually on Vietnam. And I think Trump 2.0, what we're calling his second presidential term, we also feel that similar positive effects can come for Vietnam. We were actually in Hanoi about a month ago, visiting some companies, and we saw this real shift in the manufacturing base from southern China to northern Vietnam. And along with that, we're also seeing some financial capital follow. So I think net-net, we are aware of the risks of Trump's global tariff effect. But for the Vietnamese market, we feel we are somewhat insulated, and in fact, could be quite a net positive for the market in general. Okay, let's move on to the next question. Let's see. Okay, another question is on the GDP. An audience member is wondering, do you think the GDP growth of 7% to 8% in 2025 and the GDP growth beyond that is too aggressive? Maybe Lei, you could take this one on?
Yes, yeah. Sure. You have listened. Our in-house forecast for GDP growth is 7%. So we do think that 8% and above is a bit ambitious from our government, and they have stated that they will accommodate that by giving more flexible in terms of managing inflation, managing state deficit, and so they will boost even more infrastructure spending. But our view is that for Vietnam, the export and import is still very significant. We have been so much open, and export and import together accounts for 200% of GDP. So the external factor definitely going to be a challenge for Vietnam to reach the target of 8% this year. Now, but at KIMVN, we think that when we look at the longer term view and a bigger picture, we see that 2025 is just the start of a very long-term plan. We have an ambitious plan for the next 20 years. So we think that when even if the economic numbers come in a couple of quarters late, it is not that significant. And we believe that for this year, direction is more important than the actual result.
Thanks, Lei. Khoa, anything to add?
Lei covers almost everything. For me, I just want to point out some risks for Vietnam in 2025. As mentioned earlier, we are confident on the current active government, and we think that the Vietnam outlook will be very promising. The problem of Vietnam is caused by the external effect rather than the internal one. The slowing down of the U.S. economy may affect to other countries like Vietnam. From domestic side, we think that the government is conducting a very deep restructuring at every level of the government, and we think that it will be better for Vietnam in the long run, but in the short term, maybe will affect to the system at some level. That's my point.
Okay, thank you both. So another question that we have, very topical. The current status of the FTSE upgrade. An, maybe you could take this one.
Yeah, I think we mentioned it before, but I guess the audience pay a lot of interest into this topic. So if I can, let's just summarize a little bit. We're now, I think we just met the FTSE team like a couple of weeks ago, and our discussion is, I think it's generally quite positive. And so the timeline we expect is late this year or early next year. I think it's quite feasible that we can be qualified for FTSE emerging market. Recently, we have some good news. The SSC, they have given a clear timeline for the KRX system. So we can expect the new system to start running from May this year. The KRX system is important for us to lay the foundation for CCP in 2026, and that is the key for us to become qualified for MSCI emerging markets later on.
Okay, great. So another question we have concerns the current situation of the Vietnamese real estate sector. Obviously, Vietnam has gone through some significant changes in terms of regulation and policies. Maybe this is also for Khoa. Your thoughts on the current real estate market in Vietnam?
Yeah, for me, I think that the real estate sector in Vietnam is in a recovery phase. We expect that the sector will perform well this year based on the increased government public project and regulatory reforms that streamline the licensing a lot. And the effort of the government to to reduce the obstacles in legacy projects. Overall, we think that the recovery will likely to favor to the companies with the strong reputations and execution capability good and sizable land banks.
Yes, if I could add anecdotally again, on our trip to Hanoi, we noticed that the Hanoi real estate prices have increased significantly, 20-30% in the first quarter of this year. And I think that's also part of the shift in the manufacturing base from China to Vietnam and the capital inflows that have followed the shift in the manufacturing base. So again, another anecdote from our trip to Hanoi that kind of ties in the effect of Trump's policies as well as the local real estate recovery that's happening in Vietnam. Okay, I think we won't have any more time for further Q&A session, but we will get back to you guys on the questions that you've asked online after the web seminar, so please look out for that. So with that, I'd like to thank our panel, Khoa, Lei, and An, and we'll close the Q&A session and move on to the last part of our presentation. Thank you. So yeah, if I could conclude with some highlights of our presentation. I think we started off with Khoa, our Deputy Head of Research, talking about 7% GDP growth for Vietnam, the government expecting 8%, even more optimistic. And we feel as a house that Trump's policies on Vietnam will be minimal, and that in fact it could be slightly positive net-net. Then our CIO, Deputy CIO, An, talked about the markets. Valuations are quite reasonable, trading at 1 standard deviation and 1.5 standard deviation below the historical average on a PE and PB basis. Corporate earnings are very strong. The team is looking for corporate earnings growth of almost 20% in 2025, as well as in 2026. I think there are two catalysts for the stock market this year. One, the emerging markets upgrade by FTSE, which is expected to be announced in September of 2025 and take into effect in 2026. And second, the major reforms by the Vietnamese government, cutting bureaucracy, increasing efficiency. I think these two factors can actually lead to a PE expansion for the Vietnamese market, which would add another maybe 10% to the returns on top of the corporate earnings returns of almost 20%. So I think overall, we have a cautiously optimistic view of the market this year. We're also aware of the risks that is present in the market today. But I think overall, again, I'd like to thank the team for its presentation, our special guest, Mr. Lee from IFC, And we hope to have many more seminars coming up in the near future. So please look out for the next invitation. And again, thank you everyone for participating in today's call, and happy investing. Ciao.